We are live. Good morning, good morning, good morning. Facebook. Hope you're all well. So what are we going to be talking about today? We're going to be talking about ways to embrace losing and still be profitable. So that's the subject today. Ways to embrace losing and still be profitable. Now I want to start this by saying something that as a trading coach, you see this a lot when you read in books about things that you can do to improve your trading mindset, things that you can do to become a better trader. And remember that trading is both, or successful trading is both a skill set issue and it is also a mindset issue. So when I'm working with a trader, I'm working on both of these. So I'm helping them with their skill set and their mindset because they're both interlinked. But as I've said in other videos, there are things that you can do to essentially improve your skill set. But what can you do specifically to work on your mindset? So the trouble is a lot of the stuff you will read will say things like, you've got to take emotion out of your trading. So you've got to actually take the emotion out. And that sounds logical. You've got to embrace your losses. And you hear cute phrases like, your next loss is just getting you closer to your next winner. Or you have to embrace the losses that are coming because the winners will then follow. And all of these things sound great. And you can nod your head and go, yeah, that's great. But the challenge is a lot of these things that are said are very logical and make a lot of sense. But then when the trader's in the moment and they're actually going through it, what happens is those particular feelings completely disappear. And they're consumed by the fact that they may have a loss. They're consumed by the fact that the trade is not going the way they want. So what things can you actually do? And what are the things that I do with my students that help them embrace the losses? So the first is to realize that it is something you have to get better at. The first winning trade or first losing trade, when a new trader comes along, their emotional level is going to be much higher than if you've been doing it for 5 or 6 years. But just because you've been doing it for 5 or 6 years doesn't mean you've actually got a handle on embracing your losses. But part of it is about essentially flexing the muscle and training the muscle and getting better at it. So essentially, if I've been trading for 10 years and I know how to embrace losses, then any losing run that I do have, I will probably be better at it, at handling it, than a trader that comes in fresh, has 6 winning trades and then has 3 losers, because that initial run of winners they got addicted to, and then they have the losers. So I think one of the most important things is you have to embrace both sides, but we'll talk about that in a minute. So number one, a way of embracing losses is to accept that you're never going to feel 100% positive about it. I see too many traders working on that line of, right, I've got to feel no emotion or I've got to be completely acceptance of the loss. I still, after all this time, if I have a run of losers, I don't feel good about having those losers. But I certainly don't feel as bad as some traders. So accepting that losing doesn't feel good. So that's the first thing. Number one, acceptance. And then there's a little process, and I was actually working with a new student in the room last night on this exact process. And this is called quantify, segment, and review. So they're the 3. Quantify, segment, and review. So the first thing you need to do is look at the losing run you've had, or the losing trade, or whatever the scenario is, because it might just be a bad performing period. It might not be that it's 6 losers on the trot or 4 losers on the trot or even 2. It just might be that you're not really getting anywhere. You're having a winner, then a couple of losers, winner, couple of losers, or the market's very quiet and you're not really getting any traction on your trades. So what you have to do is you have to look at it in 2 ways. If it is a run of losing trades, how many losing trades have you had? And then go and review the data that you have as live data or back-tested data. So essentially, you're quantifying those losses relative to previous past performance. And it's not to say that you will not have losses again. It's not to say that you won't continue, because sometimes a losing run can last a little while. But you need to put it in context and quantify it against what has happened before. So the first thing you do is, if it is a losing run, is quantify it based on previous results. And if it's just a bad performing period, go back over all of your data and again determine how bad that performing period is relative to some of the best performing periods you've had, but also some of the worst. So essentially what you're doing is immediately putting the performance period you're looking at into context, and that will help you embrace what you're going through. Second is segment, because what you might be doing, especially if you're trading multiple strategies, is you might be in a scenario where one of the strategies is causing 80% of that bad performance. So you might have had 10 trades, you might have had 6 losers, and as a result of that, one strategy out of the 2 has done 5 of the losers. So by segmenting it, if there's more than one strategy being traded, then morning Cole, good to see you, hope you're well. So it's really important to segment it, because sometimes you could be looking at your entire trades over that period and think nothing's working, because when things aren't working or you're going through a bad period, we tend to generalize and say everything's not working or nothing's working, when in fact it just might be that one trade is the issue. So as I've said, firstly you've got to accept them. That helps you embrace losses and accept that you're not always going to feel good about it. Secondly, go through that process, quantify, segment, and then lastly, review. So make sure that you take all of the trades, and it's in a period where you're not actually trading live, and go through and review each of the trades and see if there is anything specific you were doing wrong that you didn't realize at the time. And sometimes what will happen, if you've actually fully reviewed those trades, very often the pain that you go through, and you may see a couple of mistakes, or what will happen is you might see something on the chart that actually creates a new strategy, a new methodology. Now what I'm saying is, don't suddenly shift and start changing what you're doing, because you have to be able to trade through bad periods. But some of our best performing strategies over the last 2 years are as a result of us reviewing a bad period on a different strategy. So part of embracing it is to quantify, segment, but also review. Now, the only way you can do that effectively is if you've got the data, which brings me on to the third way of embracing losses, is you must record the data. A lot of traders will sweep bad trades under the carpet, so you must get the data on a sheet. And part of accepting and embracing the loss is having it in front of you rather than just pushing it aside and imagining that it hasn't actually happened. So you must make sure you collect the data, and in the same breath, a way of embracing losses is to be flexible with that data. Because a lot of traders will come along and they'll do 3 months, 6 months worth of back testing, and it will give them a result. It will give them a performance result, and then they'll go and trade live for the same period, and what will happen is they will underperform the previous 3 months. So let's say those 3 months gave them 30% return. They trade for the next 3 months and walk away with 10% return. And then what happens is they start to be too inflexible. They say, well, the results for these 3 months are not the same as the results for these 3 months. But the trouble is their expectation is too high. They expect the results to be the same in blocks like that, and trading doesn't work that way. So yes, you've got to have the data, but you have got to embrace the fact that it's not going to be exactly the same all of the time, and you're going to see performing periods that are better and worse. But the data is there to help you do what I was just talking about, which is quantify, segment, and review. And then number 4, another simple way to help you embrace losses is make sure you're managing your risk correctly. It's a lot easier to embrace 1 or 2 losers on the trot if you've risked 1% per trade or 0.5% per trade. That is a lot easier, and those losses are easier to embrace than if you've risked 3, 4, or 5% per trade. I remember working with a lady, it's probably about 7, 8 years ago, and she says, I just can't seem to embrace my losses. You seem so calm about your losses, Ali. But when we actually looked at her data, so she sent her data in, what we found out was she was risking 6 to 7% per trade. And I said to her, I said, I would struggle to embrace my losses. I would struggle to be okay losing if I was sticking 6, 7, or 8% on every single trade that I was running. So very simply, manage your risk. And then number 5, another way to help embrace losses is Be around other traders that are trading similar setups to you. You're not copying them, but if you know other traders are going through a losing period or a bad performing period, knowing that you're not the only one is another way to help you embrace that. And alongside that, get feedback from somebody who has been through it on a regular basis. Just knowing that what you're going through isn't out of the norm will help you embrace that period where you're not getting the results that you want. And then two more, strange one here, number 6, energy. So one of the things that I've noticed is that if my energy is low and I'm feeling tired, I tend to generalize and I tend to cope with things not going my way in a more downward way. So if I'm tired and I have a losing run of trades, it's probably going to affect me more, and I'm going to find it harder to embrace them if my energy's off point. So if I'm feeling good, I can shrug things off a lot more easily than if I am not feeling good. And invariably your concentration is better. So what you end up finding is you place better trades. But yeah, be wary of energy, because that's where the generalizations come in, like nothing's working or none of my strategies are performing, when in fact it might only be one, as we said earlier. And then lastly, I think this is a really, really important point, and one that a lot of traders overlook, is make sure you monitor your perception of your trades before you place them. Because a lot of what we've been talking about here is embracing your losses. But by embracing your loss, the trade has to have finished and it has to be a loss. So it's post-trade that we are aiming to work on. But actually, you can do a lot about how you feel about a trade at the end of the trade by what you do at the start of the trade. So one of the things that I say to students is, you may get a setup come along and it meets all your criteria. The chart is really clean. You may have had a good performing period the previous month, and you look at this setup and you almost treat the setup as winning because of the clarity of it and the cleanness of the chart. You treat that setup as winning before the trade has even finished. And the trouble is with that is, if you get too confident about the result of a trade, you risk imagining that trade winning before it has. And then if that trade loses, what happens is that loser hits you more because you had a false expectation that just because you were looking at a good quality setup, it had more chance of winning. So you have to embrace both sides of the potential outcome when you place the trade. So if I see traders in my trading room getting almost too excited about the quality of a setup and almost thinking like the trade is going to win just because the chart looks clean, I automatically get them to embrace the fact and contemplate the fact that the trade in its individual scenario has just as much chance of losing, and the quality of the setup does not play out on one trade. The quality of the setup plays out over multiple trades. So really be aware that one of the subtle but very effective ways of embracing your losses is to set yourself up in a way at the start that means that you are not thinking the trade has got more chance of winning at the end. So we've covered a lot today there. If you want to leave a message or ask a question, just do so below. And that's pretty much all I've got for today, but I will be back again very soon. Have a good week, trade safe, and I'll be back in touch soon.